Think your business is safe from an IRS audit? You might want to think again. Every year, thousands of business owners triggers audits without even realizing it. And it's not because they're doing anything illegal. It's because they're making common mistakes the IRS are actively looking for. I'm Trevor Densmore, founder of TJD Accounting Tax. I spent over a decade helping business owners avoid costly mistakes and audits by staying ahead of the IRS red flags. In this video, I'm going to break down the 7 audit triggers that quietly flag your return for review, and most importantly, how to avoid them. If you want to protect your business, your finances, and your peace of mind, keep watching, because this will show you how to stay invisible to the IRS and keep more of your hard-earned money. Even small errors can lead to big consequences, and what you don't know can get you audited. So let me show you how to avoid the IRS biggest traps. Keep more of your money and run a stress-free business like the top 1% starting today. The first and most common red flag, and also the easiest for the IRS to spot, is unreported income. You see, the IRS automatically cross-references your reported income with the information that they receive from third-party sources such as 1099 from clients, W-2s, payment processors, as well as K-1s. And a discrepancy between these numbers is a guaranteed audit trigger. To avoid this, you're going to want to first track all income from every source meticulously. 2, you want to reconcile all 1099s and other forms that you receive before filing. 3, use a dedicated business bank account to ensure a clear income trail. The second red flag is all about numbers that you choose to report. 2, disproportionate deductions. When your deductions for things such as meals, travel, home office deduction are higher than your revenue, or they're higher than industry average, this raises suspicion that you could be potentially deducting personal expense. To avoid this, you only want to take legitimate deductions that are ordinary and necessary for your business. Also, you're going to want to maintain impeccable records with receipts, mileage log, and a business purpose for every expense. The next red flag is a common mistake for many new entrepreneurs. 3, blatant home office misuse. The home office deduction can be a major audit magnet because many business owners claim it without meeting the strict exclusive and regular use rules. The IRS is going to want to know if you're writing off a part of your house that is used for personal reasons. To avoid this, you want to ensure that the space is used exclusively and regularly for your business. Also, be prepared to document the space and its use. Next up, a seemingly harmless habit that can be a major red flag. 4, rounding numbers and estimating entries. You see, the IRS knows that real business transactions rarely end with perfectly round numbers. A pattern of round numbers and estimated figures on your return suggests that you're guessing and you're not reporting actual records. This signals a lack of proper bookkeeping and a potential for inaccuracy. To avoid this, you're going to want to report precise and exact amounts based on your financial records. Also use accounting software to track all expenses to the cent. The next one is a very common mistake for new business owners. 5, the commingling catastrophe, mixing personal and business expenses. Using your personal bank account for business expenses or vice versa makes it impossible to tell which expense is actually legitimate business deduction. The IRS sees your business as a separate entity, and commingling funds destroys the credibility of your financial records. To avoid this, you want to establish a business bank account and credit card. Additionally, you want to pay yourself a salary or owner's draw and transfer the money from your business account to your personal account. The next red flag can have serious financial consequences. 6, the unpaid payroll trap. Contractor versus employee misclassification. The IRS monitors this closely because misclassifying an employee as a 1099 contractor allows the business to avoid paying payroll taxes and benefits. Penalties for misclassification can be severe, often 100% of the unpaid taxes. A worker is an employee when you control what they do and how they do it. And if you're unsure, consult a professional to ensure that your workers are properly classified. And finally, the simplest red flag of them all. 7. The careless mistake. Basic math and filing errors. Simple math, typos, and missing information are still a major cause of audits. And the IRS automated system can catch these mistakes instantly. It signals a lack of care and professionalism, prompting a closer review of your return. You're going to want to use a reliable tax software or a professional accountant to file your taxes electronically. You're going to want to make sure that you're double checking all of your information, such as your social security number, tax ID number, all totals before you submit your return. If you're still here, that means that you take your business seriously and you now know how easy it is to end up on the IRS radar, even if you didn't mean to. Most business owners don't trigger an audit because they're cheating the system. They trigger audits because they don't know the rules, or they rely on accountants that are just filing and not protecting. At TJD Accounting Tax, we just don't help clients file their taxes. We help them bulletproof their books, avoid red flags, and stay completely audit ready. And the best part, you don't need to figure any of this out on your own. If you would like me or my team to review your business structure, your books, or your current risk and show you how to legally protect your business and keep more of what you earn, click the link in your description to book a complimentary strategy call. An audit can cost tens of thousands, or a single conversation can save you from it altogether. The choice is yours. Let's make sure to stay on the safe side.